Good morning, it's Jonathan Barrett with this week's Markets Buzz. It's Monday, the 17th of August, and another week of eventful information, another week of eventful trading, which is going to certainly sort of test us, I think. Lots of volatility out there. Just to recap, US equities lose a little bit of stream as the US economy shows more signs of slowing down. Obviously, quite a big week this week. There's lots happening there in terms of the data we're going to see. Last week's inflation data was quite important out of the States. This week we've got the Fed statement, whether we go dovish or whether we remain hawkish. And yeah, I would like to see a bit of dovish there, but I think they'll stay hawkish for some time. Okay, Fed statement due, as we said, inflation 3.4%, still pretty good last month, still outside the Fed's band, so I don't think they'll see much on that interest rate front for the time being. Retail sales was a little bit alarming, down 0.6% versus an expected 0.3% gain. Now that's telling us that the US economy is starting to soften. Also, the Michigan consumer sentiment numbers came out, dropped to 51 from a previous rate of 55.2. That's quite significant. So I think when you do look at it, that retail sales in the States is looking quite soft, and that's giving us an overall softer feel. Obviously, President Trump wants the Fed to cut rates. Let's see exactly what the statement will say this week to conclude exactly where we think we'll be going in terms of interest rate or monetary policy in the US. Over in China, we had the inflation numbers, and obviously that was over the weekend. And inflation was a meager 0.5%, and the year-on-year PPIs soft more than consensus to about 3.5%. Not a lot happening there in terms of the inflation, still deflationary maybe, but maybe starting to pick up. However, it is being managed very well, as we know, because you've got that socialist market economy. But it does concern us that more deflationary feels there in China, whilst we've obviously got the inflationary feels in the US. Gold and silver, precious metals, still looking okay there, still happy with that trade. I do think that if we do spin to a neutral phase, the market will like it. More of a dovish phase will certainly help gold and silver. Still like the silver movement there. Remember, there's still some very positive supply-demand stories happening there, particularly on the demand side for ore or silver-bearing ore into China. And if she's going to maintain her status quo as the leader, whether it's e-cars, electric vehicles, or whether it's solar, she needs silver. So, and we know what China's like with that as a raw product. She will buy. Also, Aussie RBA left cash rates the same last week, 4.35. Just wait and see type of thinking there. And on the flip side, we've seen wheat saw about 3%. That's about 5.5% on the week. That's a trade we've been looking at for some time. In this week's buzz, we have a deeper dive into what's happening with the Super El Niño. And to me, that's something that, well, you'll get an insight once you read through the report. We'll also do a summary on the trade focus of what the El Niño's and how that will affect the wheat price as well. So quite a bit to get through, particularly on what's happening with the Super El Niño. And okay, so let's deep dive into that. Now, I guess when we look at it, we're seeing continual headlines of soaring temperatures, bushfires, and now we've got this emergence of a Super El Niño. Now, it's not an actual meteorological term, but it just means that this is an El Niño event that is outside the norm. And when you look at it being outside the norm, particularly when you look at the downstream effects of what will actually occur. And to me, that's the key. An El Niño occurs when the sea surface temperature across the central and eastern equatorial Pacific becomes significantly warmer, and that alters the atmospheric circulation of wet patterns around the world. And normal El Niño is identified by when the Pacific sea temperature remains at around 0.5% above the average. And when you look at that, a Super El Niño refers to an event where this anomaly becomes exceptionally large, and we're looking at around plus 2% or greater. Now, that is a concern because if we see that certain areas are a lot warmer In Australia, for instance, we see more less precipitation, more dry conditions, and as an effect on that, will have an effect on, yeah, the agricultural market. So not only that, if you don't have much water in the system, it affects hydropower, it affects a whole lot of other events. But at the end of the day, we get this inflationary push. Now, we've already come off the stream of an inflationary push caused by effects in the Middle East and Russia and Ukraine. And now we're starting to gear ourselves up for a similar event starting to occur again. So that's not going to be very helpful to a lot of the central banks because they're looking to, economies are slowing down and they're looking to reward their market by having a dovish approach. Now, once this kicks into gear, then we could see prices actually start to rise, and there'll be that inflationary pressure. Now, the drivers don't often happen straight away. So what that actually means is that we will see sort of, I guess, six of our major regions of food bowls affected, and that would mean reduced yields. And as a result of that reduced yields, then we'll see prices generally higher. Now, that comes from regions which we've got Australia, US plains, India, Brazil, Argentina, and Southern Africa. So these guys are very part of our food balls, and these guys, will be agricultural losers as a result of that. So when you do look at it, there is this importance. Now, the importance of where we're at, it's not the fact that this is happening as a start. What it is, it's happening on top of other events that are occurring. And it's the combined effect of these other events should make an impact on where we think the markets. For instance, when we saw Russia invade the Ukraine, wheat prices, for instance, moved up. Wheat prices moved substantially higher. And we saw a movement there up to record highs, about $1,300 a bushel. We're currently at $630 a bushel. Okay. Also, we're coming off the back of the US plains drought. And if that combines with the poor Australian season, then the supply of wheat will stop. Another problem will ease. Another issue will be the Ukraine or Russian conflict. Remember, the Ukraine actually came out and said, well, they've attacked one of the major ports there in the Black Sea. And as a result of that, that's where we see a lot of wheat get exported. Now, the Black Sea region in itself accounts for close to 30% of the wheat that goes into the market. So any shock from there as a result of Ukraine will have an impact globally. So when we look at the Super El Nino by itself, then look at the other events that we're seeing globally, the other macro events, then we can see this convergence of ideas which could see prices scale quite dramatically higher. So that's why we remain long wheat. We have remained wheat for some time and will continue to remain so. So we certainly look at that. So have a look at that. The trade of the focus is wheat, and there are reasons why we continue to be long. Okay, what's going to happen this week? I guess global markets, obviously Iran, US. We're looking for a diplomacy way to get out the US to get out of it. They need to get out of this conflict. It's just draining them too much. So the geopolitical concerns there are an issue. Monetary policy, I think, will be a firm focus this week with the Fed releasing minutes, and we'll see where the US interest rates will go. We've also got ECB to publish their meeting accounts as well. So there are quite a few things that are coming out of China, industrial production, retail sales, house prices, some importancy there, and unemployment data due for Australia, the UK, and Canada. So there's quite a bit there in terms of from an economic perspective. Okay, let's now have a look at a few of the trades. So I'll just share my screen. All right, that's the one we want. Okay, so I'm just sharing this. Okay, what have we got first off the blocks? Well, we got the Aussie. We've been long the Aussie for some time, which is good. As you can see here, momentum indicators have turned around, which is great. So we're quite happy there. And there we go. Let's just move that to there. So quite happy to see that. And momentum indicators, there we go. Let's get a little pointer out there. There we go. Yeah, now this trend's been quite solid for us. We continue to edge higher up through 71. Would like to see a test back through that 72 level. Um, it's a strong trend, and we've had a turnover here in terms of our moving averages. So that's a positive sign. So we've got to remain positive. Continue to probe higher here, which is good. So quite happy to remain long the Aussie. Okay, let's have a look at gold now. And gold just started to move higher. This consolidation phase is good. We see a breakthrough that 45, 44.50 onwards and upwards. Don't mind that as well. We are long. Obviously, if it breaks down through 3,900, revisit 30, 39, 38.50. The trade is wrong. But continue to see a test to the top side. Might get a little bit of inflationary push there as a result. Like this little move higher here, test to the highs. You've got to be happy with the fact that gold looks good. Silver, same thing with silver, although silver hasn't moved just as much as gold yet, but it's broken some trends, trading quite nicely. So I would like to see that continue to trade higher from here. Onwards and upwards it goes. So silver in my mind, just another area to get long and to add to positions. Locally on the equity markets, we haven't done too well there, but we had a little turnaround. When you do look at that, oops, yeah, you can see that we've sort of had that high, and we're now back to 9,900. We are short. We think the valuations are warranted. They're too high. We're happy to remain short on that for the foreseeable future. So let's see what happens there. On the Dow, the S&P, still on those record highs. Um, yeah, haven't seen a turnaround yet, so we've got a little bit of ice in the belly, as an old trader of my friend used to say. Just to sit it out because you think it's just the market trying to prove to itself. It won't go. Well, it can't be up these levels for too much longer. Now looking at the crude market, we did take profits on our crude. Just looking at it, when you do look at crude, it does still feels like it wants to trade higher from here. But I think the US is going to have to come to the party pretty quickly in terms of where the market where it should be. I do think that whenever it see a significant spike, the US might come back and say we've got to get out of here. But the situation we're seeing there is continuing to spook the market and onwards and upwards. So I don't see it. Yeah, we took some profit, but it's going to be quite volatile. So yeah, that's about it from me. There's no other real market I want to talk about apart from that wheat trade. And you'll be able to see the charts on the wheat trade, and you can see the reasons why we actually like it. From a technical perspective, it's technical perspective, it looks quite solid. So have a look at the charts on the weekly buzz, and that'll give you a bit of an idea of to where we see things going. Well, that's about it from me. I hope everyone has a great week's trading, and we'll talk to you soon. Bye for now.